And this is one of the reasons you see so much metal being taken off of the Shanghai Metals Exchange. The people in China are saving their wealth in gold and silver, and they're taking possession of it. This is a trend that isn't just for the state at all, not to mention their numbers, their import numbers have been flagged where they said for quite some time, we're not buying any. No, that's not true. They were flagged by the import-export numbers. And the estimates coming out of the IMF right now and out of analysts from TD Bank is that the accumulation by the central banks in China in particular is as much as 10 times underreported, and it's probably more than that. Why would they want anyone to know how much gold they're accumulating if indeed this whole ecosystem is going to be a function of or a backing of gold ownership?
China's push to move away from the US dollar has hit a new peak in 2025. Global dollar reserves have plunged to just 47%, the lowest on record. What's fueling this drop is a coordinated BRICS strategy to introduce alternatives to the dollar in trade and settlement. The result? The most dramatic fall in the dollar's global dominance since the collapse of the Bretton Woods system in 1973. And this time, the shift is happening faster than anyone expected. Andy Schectman, CEO of Miles Franklin Precious Metals, points to real-world applications already in motion. China, he says, has been quietly testing a new system using the yuan to settle oil and gold trades with the UAE. These transactions can be finalized directly in gold via the Shanghai Metals Exchange. That completely bypasses SWIFT, keeps the trade private, and eliminates any need to convert into US dollars. As the threat of tariffs continues to rise, central banks are getting the message. The Official Monetary and Financial Institutions Forum reports that 80% of central banks are seriously concerned about political instability in the US. Around a third of them plan to increase their gold holdings within the next 1 to 2 years. China's central bank has been steadily adding physical gold to its reserves for over 3 years. This trend began when Russia invaded Ukraine in 2022, according to Jan Nieuwenhuij, a gold analyst at Money Metals. Since then, there's been growing speculation that China is buying far more gold than publicly disclosed. Schectman points to reports suggesting China may now hold as much as 38,000 metric tons of gold, when combining official state reserves with privately held stockpiles. This isn't about symbolism or showing off wealth. It's a strategic move aimed at building a foundation for a new kind of global trade, one that doesn't rely on the US dollar. Make sure to tune in for our expert analysis. Don't miss out on future content, hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
First of all, the agreement that wasn't re-upped, the 50-year agreement that wasn't re-upped, said we're not going to not take dollars, but we'll take other currencies too. But the key to the petrodollar deal, which is really the key to my thinking in all of this, is not so much the dollar being sold for oil globally. Sure, that's huge. But more along the lines of reinvesting all reserves into U.S. treasuries, which fund our spending addiction. That's the key, really, to understanding a lot of this. So, yes, that is true. And that's where Zoltan Pozsar comes into all of this. And Zoltan Pozsar is someone I've followed for a long time who used to work at the New York Fed, understands the plumbing of the financial system maybe better than anyone. I think he's at UBS right now. But he calls where we are right now Bretton Woods 3. Bretton Woods 1, when we took over for the pound sterling after World War II. Bretton Woods 2, loosely, to your point, when we became the petrodollar. And that kind of ended, right? That ended when the Saudis say, well, we're going to take other currencies too, no more exclusivity. Bretton Woods 3 right now, a system that's all about transparency, blockchain, mBridge, instant settlement, instant veracity, instant auditing, and gold. The function of gold acts in this case not to replace the currency, but to replace what stands behind the currency. In this case, it would be the treasury market. It is trust. And when put on a distributed ledger with instant auditing, instant veracity, yes, you are getting as close to that trust situation that is needed as you'll ever find. Trust. It is to internationalize the ability for traders in the, or clients, I guess you could call them clients, which would be central banks, other countries in the Middle East, in Africa, in Asia, let's call it the Belt Road. The idea is to internationalize the yuan for trade amongst the Belt Road, which is all throughout this area, in particular Asia and Africa, eventually into South America, to facilitate trade over the mBridge system, which is instant settlement, free from SWIFT intervention, and settle any and all imbalances in gold, which will be built amongst a series of multi-jurisdictional vaults. The first vault, built by the Shanghai Gold Exchange, operated by the Bank of China, will be in Hong Kong. Whenever there is deliveries out of China, it has to come out of Hong Kong. So it would be deliverable right now in China for any country that's doing business with China and accepting yuan in payment. They can deliver that directly to the Shanghai Metals Exchange in Hong Kong and take delivery off of the exchange if they want, or store it there if they want. The next one that is going to be built will be in Saudi Arabia, and then from there on it will be sprinkled throughout the Belt Road, eventually throughout Asia, Africa, and South America, as a way to disintermediate, if you will, or to break up from having one player hold all of the metal. It will be sprinkled amongst all of these jurisdictions to even establish more trust, so that it's not jurisdictional, that everybody has some gold amongst all of these jurisdictions, and it makes it much easier, rather than, say, like the COMEX or the Bank of England holding everyone's gold. It will be spread around this entire new ecosystem to not only provide the legitimacy that gold does and the settlement and authenticity that the blockchain does, but to have it spread amongst various jurisdictions. So you don't get the moment like the Bank of England saying to Venezuela, yeah, it's your gold, but we're not giving it back to you. Sorry. We don't want to see that. And this is, I think, a way to really make it more foolproof in terms of its acceptance and of its legitimacy.
So other countries that China does trade with will also be putting their gold in these vaults?
Absolutely. Absolutely. And it won't be the country's vaults, the country's gold, rather. It won't be the People's Bank of China's gold or Saudi Arabia's gold per se. What it will be gold that will allow these countries to facilitate trade, right? It's not the gold that's owned by the People's Bank of China, or the gold that would be owned by, in this case, the Central Bank of Saudi Arabia. It would be more along the lines of the gold that they want to facilitate trade through probably a series of their largest commercial banks. It's a way to trade and settle in gold, not to post your own country's sovereign gold. So there's a little bit of a distinction there, but nonetheless, it's using gold as in essence, as the reserve, or as the authenticity of a system that is trying to find trust in a world that seems to have gone astray from trust. The whole purpose of the blockchain is to give veracity, to give immutability. And that's what mBridge is. Instant settlement, instant veracity. Now, as far as who's auditing it, I'm sure I don't want to bypass it like saying it's not an important detail, but I assure you those details will be worked out so that all the players who are depositing their gold amongst and that's the thing, it's not just in one vault. If it were in one vault, I would understand that. It will be amongst a series of multi-jurisdictional vaults, and everyone will sprinkle their gold in there to eliminate this kind of problem.
Do you have to physically move the gold from one vault to another?
No, you could either move it from one cage to another. Here's China's, here's Saudi Arabia's, here's Russia's, here's whatever, or they can have it delivered. So part of the plan is it can be stored or delivered. And that was also the exact same thing with the unit, deliverable upon request. Doesn't need to be delivered. It can be held within this ecosystem. But look, the same thing could be said about COMEX. It should be. The same thing could be said about the LBMA. It should be. And this is the whole concept of rehypothecation with these two exchanges. This is not rehypothecation. And the way that it isn't, it's cash and carry. I want it right now. I'm going to pay for it. I'm going to exchange it. Bang, give it to me. And if it's not there, and if there's a delay, very quickly, it just derails the whole thing. The test trades, the first two test trades were between the UAE and China for gold and for oil, not off of this new system, which has just been introduced. It's just been announced that they are now trying to internationalize the yuan and make it redeemable in gold through the Shanghai Metals Exchange in Hong Kong. And so you can store it there or you can take delivery. It's just been announced. So whether or not it has happened, it will happen. And then they said phase 2 is to build the multi-jurisdictional vaults. The first one in Hong Kong. The second one that is about to be built is in Saudi Arabia. And then from there, all throughout the Belt Road. There are no currencies that are backed by gold any longer. It just means it's redeemable in gold. And it's the exact same thing here in the United States. When you have a gold standard, you can only print as much money as is tethered to the gold standing behind the currency. This isn't what that's saying. This is saying that, hey, you can exchange your yuan for gold. And so they will continue, I'm sure, they're the largest producer of gold in the world. They will continue to add gold for trade purposes into this system. But it's not the People's Bank of China that's putting their gold in there. It's not the state's gold. And it's not gold tethered to the yuan. But just like the dollar, and the dollar is the currency in which gold is typically valued in, you can buy COMEX contracts and stand for delivery. It's the exact same thing here. Not a tethering, but an optionality in yuan, not having to convert to dollars first. So you can keep it in yuan and take it right from the Shanghai Exchange. And this is going to keep things private, if you will, masked. As they're trading it over the M-Bridge, SWIFT has no idea what's going on, nor would the U.S. for that matter. And instead of first converting to dollars, which would do so over SWIFT, which would then flag it, bang, 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 they're able to buy it right from China using yuan over M-Bridge and take delivery from the Shanghai Exchange. This is very much, and they've had insurance companies add 1% of their reserves. What if it goes to 5%? And they have plans for, Chinese housewives to buy gold through state accumulated and state-sponsored gold accumulation plans through the Shanghai Metals Exchange. And this is one of the reasons you see so much metal being taken off of the Shanghai Metals Exchange. The people in China are saving their wealth in gold and silver, and they're taking possession of it. This is a trend that isn't just for the state. Alistair MacLeod, who might be one of the smartest guys I've ever met, 3 years ago said that China had 38,000 metric tons by his estimation, 20 by the state, 18 by the people. Well, that's almost 5 times more than we supposedly have here in the United States. So I don't believe it at all. Not to mention their numbers, their import numbers have been flagged where they said for quite some time, we're not buying any. No, that's not true. They were flagged by the import-export numbers. And the estimates coming out of the IMF right now and out of analysts from TD Bank are that the accumulation by the central banks in China in particular is as much as 10 times underreported. And it's probably more than that. Why would they want anyone to know how much gold they're accumulating if indeed this whole ecosystem is going to be a function of or a backing of gold ownership? And you wouldn't. You'd want to keep it close to the vest. And that's probably why they don't want to report it. I wouldn't want to report it in that case.
China has once again offloaded more than $900 million worth of U.S. treasuries, continuing its steady retreat from dollar-denominated assets. For the third consecutive month, the country has trimmed its central bank holdings, opting instead to increase its exposure to gold. With total gold purchases now reaching $247.8 billion, China is making its priorities clear: diversify reserves and reduce reliance on the U.S. financial system. This trend isn't limited to China. Other BRICS nations, including India, Russia, Brazil, South Africa, and Egypt, have also been selling off U.S. treasuries since last year. In their place, they've been adding gold to their central bank reserves. That shift is paying off. With gold prices climbing sharply in 2025, these countries are seeing strong returns on their repositioning. Andy Schectman sees where this could be headed. He suggests the U.S. may eventually need to restore confidence in its debt markets by linking long-term treasuries to gold. Not a return to the gold standard, but a hybrid approach, offering bondholders the option to convert maturing bonds into gold. In a world where trust in fiat currencies is fading and central banks are pivoting toward hard assets, such a shift could become necessary just to stay competitive. Let's get back to the interview.
They come out and they say, here's our audit of Fort Knox. I think that would have to come first. Here's what we have. We're continuing to mine and produce and onshore more. Maybe they don't even say how much they have. I don't know. But what they do say is that we are addressing a problem that is very obvious, that we've gone too far down the indebted path, and we're taking this very seriously. We intend to grow our way out of this, and the first step is to establish credibility and trustworthiness in the most liquid asset on the planet, U.S. Treasuries. And instead of tying it to an interest rate, we're going to tie it to gold so that it doesn't matter how many dollars we produce. The more dollars and the more inflation we produce, the better it is for the holders of our bonds. So you want to take those bonds and you can trade it very, very quickly and easily, and they're very liquid, and stable coins offer it in the whole 9 yards. But you're going to do this because in the end, you're going to get gold. And that is far better than any interest rate we would promise you. You know, maybe there isn't any demand for the 20-year or the 30-year treasury anymore. Or maybe after time, maybe they do revalue it first and then they do peg it to the 30 and not just the 50. They go to the 30 and to the 20. Who knows? These are questions, the what if questions you can't answer. But what I will say is simply this, is that if it's a question of pegging it to the treasury market or not, I don't know of any other option that allows us to get out of this. So she did say in her book that ultimately it will be shorter durations also. This is the beginning. And maybe she says, look, we're going to start with 50-year treasuries. We're going to continue to accumulate. Gold's going to continue to rise. And we'll start issuing each year shorter duration treasuries. I'm not sure what their plan is, but I do know that if we don't do something unconventional like this, then it's going to be not just a hard landing. It's going to be a complete and total reversal of everything. That's when you get the reset, when the world completely lose confidence in this country and just dumps dollars and dumps treasuries. And that's your Operation Sandman moment, where that happens in a tsunami and rates spike to the moon and everything resets. So let's hope they have a plan to figure that question. And it's just like you to ask the tough questions. And it's a fair one. What would happen to the rest of the treasury? She does say that they would issue shorter duration over time. Maybe they say this marks the beginning of our sound money movement. We're starting with 50-year, and here's our plan to roll out shorter durations over time. You know, China's been selling treasuries. They're now number 3. You look at
July 4th of next year seems a little close, though.
Yeah, but the Fed is already coming in and buying treasuries. They're saying they're doing quantitative tightening, but a month ago they came in and bought $48 billion in 10 and 30-year treasuries because no one was buying them. Then the next 2 weeks in a row, the Treasury came in and bought back longer duration treasuries by issuing short-term debt because no one's buying them. China's not buying them, and we're supposed to believe that the number 2 holder now is the United Kingdom. So 2 broke countries are buying each other's debt. It's like 2 drunk guys leaning on each other. And then, of course, you got the Cayman Islands as number 3 or 4. The point of it is that the people or the countries that have been supporting us are no longer doing so. In fact, they're selling or talking of selling. The Bank of Japan is hanging on an edge right now. In fact, last night, and I can't confirm this, but Robert Kiyosaki texted me last night and said he was just told through credible sources that 2 or 3 of the members of the Bank of Japan committed suicide last night. Now, I can't confirm that. Robert, I love you. Thank you. But my point is that they have $1 trillion in our treasuries, and they've been talking about having to sell those treasuries to get their own house in order. So what happens when everyone starts selling treasuries? It's a big, big, big problem. It truly is, because the demand globally is not what it once was because of where we are, because we have to inflate. And if we inflate and rates go higher, then those treasuries become worth less and less and less. And not only that, the face value becomes worth less and less and less through inflation. Holding duration treasuries right now is as stupid as a mud wall. And I think the world knows that. And I think God bless someone like Judy who's smart enough to say something about it. We're all having our head in the sand to pretend that our indebtedness doesn't matter. It's a lie, and it does matter, and it's destroying the viability of this country and the demand of the U.S. Treasury market. So destroy the currency and save the Treasury market is the only pathway that I see that allows us out of this quandary, or a hope of it, without literally resetting the whole system. Just like that. Father's saying the golden are negotiating. He who has the gold makes the rules. I mean, really? What's that all about? And when his son comes out and says, my dad's going to revalue the price of gold, I don't know. I mean, here again, crumb, 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 crumb. Connect the dots. Take a leap of faith and say what you believe. That's my motto. And that's what I'm doing. Now, I may be wrong, but all I can simply say is this, that gold is taking on a far different role than anything I've ever seen before, and it is becoming very obviously important to very, very, very wealthy, sophisticated, high up people in this country. But it's been that way around the globe for the last several years. We're just catching on a little bit later, and maybe that's why they have to be so quiet, because we're running out of runway. And if they are planning on doing something next July 4th, they have less than a year to accomplish all this. We're getting close. So yeah, keep your mouth shut, bring as much in as you can. Drop a few crumbs, let people know, but don't be forthright about what you're doing. See, the way that the West has been doing it forever is by suppressing the paper price, but China caught on, and what I think China is doing is joining in on suppressing gold and silver on the COMEX, which suppresses the price, and then they go all around the world and they buy it up from places that do not reflect an increase in the price. They buy it from the miners directly. They buy it from other exchanges that don't have an effect on the price. The price is set in the West. And if they drive the paper price down with futures contracts, which we see all the time, they can then go buy the real thing at subsidized prices immediately around the globe, and it doesn't change the price. So I would argue the West is doing the exact same thing. Let me just say one thing. You know, I take pride in knowing that I've been right on a lot of stuff. But a lot of stuff I said I had to connect the dots, and there are missing dots. And either I'm stupid or I'm courageous enough to say it publicly. And some things I've been wrong on, some things I've been right on. You can look at Occam's razor, connect as many dots as possible. And what does Occam say about it? Occam says that this is not just some normal tariff play. This is far deeper than that. And you look at the comments being made by Trump. He who has the gold makes the rules. You look at our Treasury Secretary who says we're going to remonetize the balance sheet and is a self-proclaimed gold bug. You look at Judy Shelton, who talks about gold-backed 50-year treasuries next year, where she says July 4th, 2026. It's coming, she said. She told me that. It's coming. He told me it. It's a big deal to him. The point of it is that there's so much smoke. Where's the fire? Occam's razor would say, yeah. And I'm courageous enough to say, this is what I believe. I guess we'll see if I'm right. Only time will tell. But I would bet my bottom dollar that it's closer to this than what we've been led to believe by the talking heads of arbitrage between London and the U.S. and tariff threats by Trump. It's way deeper than that.
Not long ago, the idea of large-scale dollar rejections sounded like economic fiction. Now, it's unfolding in real time. A growing number of nations are replacing paper promises with tangible wealth and developing systems that operate entirely outside the traditional Western-led financial infrastructure. Gold is no longer just a haven. It's becoming the backbone of a parallel system, one where trust is built on assets you can hold, not just numbers on a screen. The quiet, calculated moves from central banks signal more than just diversification. This is a reset in motion. Is the global financial order preparing to pivot towards something radically different? And if so, how much longer can the dollar hold its central seat? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.